Alright, hello everyone. So this is a video on how to use the swing days to swing trade, because some people are swing trading and I want to show how you can do it if you're going to do it. Alright, so first of all, let's take a look at this. Let's take a look at last week so we can have an example, because this week is not over yet. It's only Tuesday. So for example, last week we had gold Monday to Friday, Euro dollar Wednesday, Friday, Bitcoin, SP 500, Dow, Nasdaq, and we had trade hours for every day of the week, as you can see, right, with a video. So how can we use that? So if I take a look at last week, let's take a look at gold then. All right, so with gold Monday, Friday, right? So let's take a look. Now that's Monday and that's Friday. So for somebody selling on a Monday, following it all the way into Friday was doable. Okay, why? Because we have a down retracement to the upside, sell off into the next swing days. Now that's your Friday and this is Monday. Remember, Monday for gold, Monday is a swing day this week. So this is Monday, market made a low, and we can now follow that through until the next swing day, which is going to be Thursday, right? But let's do this before we get carried away. That's Monday, Tuesday, Wednesday, Thursday, all right? So we can expect the market to go up into Thursday, all right? But we're in between levels. Now, if you want to swing trade and match a swing day, then you've got to match it to a place where the market is likely to retrace. This is okay to do so because the market came back into 37.5, which is our favorite. Okay, so 37.5, sometimes 25, but I like 37.5, as you guys know. So from here, it's okay to buy into Thursday, but that won't always be the case, and I'll explain why. Let's go to SP 500. Now, last week we had 3 possible days on that one. This week we've got with the SP 500 Monday or Tuesday. All right, as you can see, we had Wednesday, Thursday, Friday. So these are all possible swings. Obviously, because we're high, we want to sell, and because we got Wednesday, Thursday, Friday plus Monday and Tuesday, I'm thinking, okay, this is good to sell off. Okay, because we've got like 5 days, 5 trading days in a row giving us a push. I can sell this into there. But for example, when I've got days that are like in a sideways market, a swing here won't necessarily take you into that day, okay? Or a swing here will not necessarily take you down into the next swing day, which is that one. You see what I mean? So the only way to use swing days is if you say to yourself, well, wait a minute, I'm going to swing because it's a swing level. Like, for example, yes, I can swing because the market pulled back, the overall trend is up, and I'm happy to go up with it. And I've got a price zone, let's say. All right, let's get rid of this for the sake of argument. And same with anywhere else. So, for example, this is a good setup, right? I've got an impulse wave going up into there. Market slowing down. It's a swing day coming into the next swing day, as you can see. All right, see, that's like Monday, Wednesday, Friday. Okay, and then Friday comes back close to the 37.5. This is the bar where the breakout happened. So that's the reason, the cause, and that's a swing day. So the next day is okay to go in onto the next swing day, but like I said, it won't always work that way if the market's going sideways. So you really need to match it to some kind of technical analysis and say, well, wait a minute, that's a swing day. We're at a 37.5. We're at a 25 level retracement. Yeah, I can take that and follow it through at least to the next swing day or to the high, right? And then kind of get out. You see what I mean? So not every swing day is going to give you that push from one swing day to the other, because it could be like one after the other. Like here, look, it's like a Monday, Wednesday, Friday kind of thing. Okay, it's like you see here, we've got 2 days in a row. So the market from the high sold off, and then from that low went up. Okay, so if I get rid of this, you'll see what I mean. So I've got 2 days in a row, one's a sell, one's a buy. Okay, so they shorted it to buy again to the next swing days up here. And if you're selling here, for example, you see it hasn't gone down until this whole thing kind of did its job and then went down. So if you went long here, for example, you know, maybe it wouldn't, you see it's not going that much up, it's just going sideways. So it doesn't necessarily have to be from one swing day to the other if you're going to swing trade. The important thing is to make sure that if you're going to swing trade it, yeah, for example, we came down, it's a swing day, we're at the lows, I'm happy to do so till we get at least to the high of there or to these swing days. Other than that, it's not, you know, it's not a guarantee, because a swing day means we're expecting the market to swing or break out. So those days for us are going to be important, and we're going to see if it's going to break out or not. And if it does break out, then we want to go to the next swing day. But that next swing day doesn't necessarily have to be a swing. So if you're going to swing trade just based on the swing days, what you have to do is to wait for the swing day that matches a decent pullback, which you can trade off, and not just every swing day that we might have for the week. Okay, so for example, the 11th to the 15th week. So you can't just trade, you know, every swing day like a swing. It has to match a decent swing level understanding. And then why is it important? Because then you can say, well, it's a swing day and a swing level, so yeah, let's trade it off. Okay, let's trade and be done with it. Like this impulse pullback, it's a trading day, it's a swing day, let's do it, and it makes sense. Same with here, market's gone up, you see the market's going up, upwards, trends going up. Okay, and this is the cause. You see the red bar here, it's the dip, and then there's the breakout. So the market is coming in to there. All right, that's the low. As you can see now, we've got a swing day. Okay, and then you can push up. So you have to have some kind of a, you know, technical understanding of what that swing price level is going to be, and then you can say, all right, you know what, that's a good swing level, and then it's a swing day, and then you can in fact put in the swing hours as well. You can say, okay, what time are we going to trade? Okay, so let's take a look at Friday last week. So these were the hours for Friday. Let's say, was it Friday, Monday, Friday? Monday, Friday, right? So we had gold Monday to Friday, and then on Friday, okay, so this, let's go to gold. Okay, so this is Friday, and on Friday we'd be looking at trading these hours. Okay, and then I've got a direction targeting 9 o'clock closing. Okay, so 9 p.m. my time until closing. Remember, we're always UTC plus 3, so you have to match it to your local hours. And then on a Friday, you can come and trade off those hours. All right, so that's your Friday. And Monday today is also a swing day for gold. All right, so I've got Friday, which is this day here. All right, this is Friday. Let's take a look at this. This is Monday, and this is Friday. All right, so Friday, market made a base. Monday is also a swing day, sweeps everybody, sweeps the low, and then pushes up, as you can see. So Friday and Monday, we're looking to buy the market at trading hours. Okay, and this is a setup from yesterday. I talked about it today as well. You could have also entered it today too, not a problem. The low of the day was here. As you can see, I've moved the stop up a little bit because there's going to be some volatility during these hours. So if things go pear shape, I don't want a big loss. So knowing these hours is important. And as we get to these hours, you can see I've got take profit levels here. So those take profit levels can be hit here. And I know the price as well. So knowing the price, knowing the hour, knowing the swing day, I can enter with multiple lots like I've done here and just trade it off. But if you're going to swing it, okay, then this is okay to swing it into Thursday. And if we have a breakout, we've got the target levels there. But it doesn't always happen that way. Okay, so you have to match your swing day into a swing technical analysis price level so you can, trade it off that way in that direction. I hope that makes sense. If it doesn't, make a comment in the video below and, I'll go over it with another short video or something. But this is important to understand. A swing day doesn't necessarily mean that we're going to be swinging for, a few days all the time. If you match it to a level, then yes, you can do that. But if you're not, if you're in mid levels, it could be up, down, and you need to be careful, like here as well. All right, like here. Okay, so there's an impulse wave down, market goes up into a retracement. Swinging for a few days is okay until the next swing day, but doesn't always work that way. You could be stuck in between levels, and that's why you need to match it to a decent price if you're going to swing it to the upside. Like here, we've got 3 days in a row. Look, 1, 2, 3. Market turns on the third day, going into the next swing days here to turn around. Okay, so it needs to make sense when you're matching a swing day to a technical analysis swing level.